Chalo, can we start? Okay, everyone. So let's start AS 15, Accounting Standard 15. Once again, I will say from exam point to easy. Exam point easy, only you need to understand 2-3 points. Okay? Because limited questions are there. There are 4 or 5 questions are there. The question, if they ask, they will ask that question only. Now, employee benefit, I hope you have understood that all the employee benefit expense, whatever we record in SOPL is as per AS 15, except any employee share based payment. Means if supposed to employ, you are paid in the form of equity share, that is not covered in this chapter. Means employee stock option plan is not covered in this chapter. Okay. So this standard is applicable for all employee benefit expense except employee share based payment. Understood? So employee benefit means what? Employee benefit means all the form of consideration payable by the entity to its employee for the service rendered by the employee. So in this chapter, we are here to understand what is the accounting treatment of EB expense. Now here employee will include all types of employee, whether it is full-time employee, part-time employee, permanent employee, casual employee, or any other employee, including directors. Including directors and managerial person. The directors are also employee of the company. Chalega. Now, this will include unskilled employees, semi-skilled employees, skilled employees, means any type of employee. Even though they are labor, it is covered in this chapter. This will not include contract labor and training. So, if you have appointed some contract labor or training are not employed. For example, these articles are not employed. You are getting a stipend, you are not getting salary. So for you, AS 15 is not applicable. Understood? Similarly, any contract labor, for example, suppose we have taken the services of security agency. So normally, if you have hired some employee from security agency, so the security guard are not our employee. We'll pay to the agency. Agency will pay to whom? Security person. Okay. So they are not covered under this chapter. Okay, sir. Now, for understanding the accounting treatment, all the employee benefit are of 4 types. One is short-term employment benefit, then long-term employment benefit, and post-employment benefit, and then termination benefit. From exam point of view, this is very important. Post-employment benefit, correct? And to some extent, short-term employment benefit is also important. Short-term employment benefit is also important. Now, let me explain you what actually this means. What actually this means? Let me explain it. If I am saying, suppose this is the current year. This is the current year, correct? And these are the future year. These are the future year. And let us assume on this date the employee will retire. On this the employee will retire, correct? So can you see in the current year the employee will give services. In the current year, the employee will give services. Understood? Now, for these services, either the amount will be paid in current year or will be paid in within 12 months from the end of reporting period. Correct? Are you able to understand? Or it may be paid, the amount may be payable after 12 months from the end of reporting period. Correct now? Or it may be paid after retirement. It may be paid after retirement. It may be paid after retirement. Correct? This can be 3 situations. For which services? For the services rendered in the current year. Are you getting what I am saying? So if the amount is paid or payable in this, so this is known as short-term employment benefit. This is known as what? Short-term employment benefit. If this is payable after 12 months from the end of reporting period, if it is payable after 12 months from the end of reporting period, this is known as long-term employment benefit. And if this is payable after retirement, this is known as post-employment benefit. Post-employment benefit. Got this point? Got this point? Correct. Understood. Now the question is that whatever may be the point of payment. My question to you all, this short-term employee benefit, whether paid or payable, is to be recognized in current year or is to be recognized in the year of payment? Means in the year in which services are rendered. Means this short-term employment will be, this short-term employment benefit will be recognized in current year only, because the services are received in current year. Chalo, short-term employment benefit you have understood. Now my question to you, long-term employment benefit will be recognized in current year or in the year in which it is paid? In the year in which it paid. Why? Why? Means long-term employment benefit has done some PAP. Are by same thing now. Service received when? Current year. We do accounting on accrual basis or payment basis. So can you see it will be also recognized in the year in which it is paid as per matching concept, because service is received in this year. Similarly, post-employment benefit is paid after retirement. So it will be recognized as an expense in current year or after retirement? Current year or after retirement? Current year, this will be also recognized as an expense in the current year. Means simple word, whatever may be the employee benefit will be recognized as an expense in the year in which services are received or rendered. Correct? Now, what our AS 15 says that short-term employee benefit will be recognized at an undiscounted amount. At an undiscounted amount, means without any discounting. But if there is a long-term and post-employment benefit, this will be recognized as an expense and liability in the year in which services are received at a discounted amount. At a discounted amount. Understood? Correct? Now, only we need to understand what will be the accounting treatment whenever we are doing discounting. That we need to understand. Undiscounted amount, very easy. It is as simple as salary. Salary paid. So salary is an example of short-term employment benefit. What is journal entry for salary paid? Salary account debit to cash or bank. Salary payable. Salary account debit to salary payable. Very simple. At an undiscounted amount. So we do at undiscounted amount because that is short-term employment benefit. So for short-term employment benefit, no much discussion required. No much discussion required. Got this point? Correct. So it means one thing we have understood, that out of this four types, these three types of employee benefit is based on past services. Yes or no? Is due to past services. Because we receive some services, we are recognizing an expense for that. But termination benefit is not due to services. Termination benefit is payable due to termination of employee. So this will happen only when employee terminate. Employee terminate. So this I will discuss at the end, but this is due to termination, not due to past services. So this I will discuss at the end. Chalega. Now coming to short-term employment benefit, meaning you have understood. Short-term employment benefit are payable within 12 months after the end of reporting period in which services are rendered. Examples may be wages and salary. It can be profit sharing bonus. It can be short-term compensated absences. It can be any other short-term employment benefits which are payable within 12 months from the end of reporting period. Can I say recognition? It will be recognized as an expense and liability when employee has rendered service at an undiscounted amount. At an undiscounted amount. What will journal entry? Benefit received and amount paid to EB expense account debit to cash or bank. If the amount is not paid, to EB expense account debit to payable. Sometimes it is prepaid. So prepaid is not an expense. Then your journal entry prepaid EB expense account debit to cash or bank. So that is not an expense. If the amount is prepaid, so we know we don't recognize it as an expense. Understood? Correct. Understood. Achha, whether EB expense can be capitalized to the cost price of asset? Yes. When? Whether EB expense can be capitalized to the cost price of asset? Which asset? Qualifying asset is nalayak for borrowing cost AS16. Qualifying asset means AS16. AS16 for interest expense. Abhi right now I am saying EB expense. And like we have done AS2. AS2 में direct labor is included in the cost price of inventory or not? Capitalized. We have done PP. In PP also we have done the employee benefit expense which are directly attributable will be capitalized. So yes. So can you say EB expense will be charged to PL as an expense unless it is capitalized to the cost price of asset as per respective AS? Means it can be capitalized or not. So that is only given. It will be recognized as an expense unless included in the cost price of asset due to the requirement of other accounting standard. Chalega? Understood. Now in this, only this is a new point, short-term compensated absences. Short-term compensated absences. Now there is no good quality of question in ICS study matter here for this. Are you getting what I am saying? There is no good question on this, but topic is there. So I will only explain such that if questions come, you should be able to do it. Now what is the short-term compensated absence? It means what? Normally you might be knowing that every employee will get some paid leave. Leave encashment. You have done an income tax act. Acha. Chalo. Now, just try to understand what they want to say. What is the concept? Suppose this is current year and this is next year. Next year. Correct? And in this year, the employee is entitled to 30 days leave. 30 days leave. Understood? Now, there can be two situations. Either they have availed the leave, means they have enjoyed with their family. Yes or no? If they have availed, then no treatment. Then no treatment. Then no treatment. Correct? Understood? But suppose they have not availed it. If they have not availed it, quite possible कि even though 30 days leave was granted, but then also they are forced to come to the company. Normally what happens, once the hierarchy of employee will increase, just for example you are chartered accountant, you are at higher position, you will not be at lower position now. So higher position means more responsibility. So can you take the leave? If for example, what happened ki before coming, I suddenly was having some emergency situation, but I can't say that I will not come to Chennai because already committed to you. So I asked, can I? So then I understood there is some, so I came here. So because can I say we are at that position that we can't take holiday. Are you able to understand? Correct. So the responsibility will increase, so your working hour will increase. So normally it might happen even though granted, but it is not available. Now if it is not available, there can be two types. Either it will be lapse, correct, then no treatment. Means left means it cannot be carried forward, correct, or if it is not lapse. Understood? Now there can be two situations as per the management policy. Either the company will give payment for extra work, means they will give you payment for this leave because you have worked on that. So either they will give you cash for unavailed leave. We call it vested leave. We call it what? It is vested. So some payment will done. So simply can I say, in this case, what we need to find out? We need to find out what is the number of unavailed leave. Correct now? We need to find out number of unavailed leave multiplied by salary per working day. multiply by salary per working day. Working day. And with this amount, can I say we recognize an expense? Whether we recognize an expense in the current year or next year? They are working in which year? The service received in which year? It is an expense of which year? So what is next year? First I was seeing him. You understood? Now what is your doubt? I don't ask much. How high? Then I need to go to what concept? This much you understood now. You are understanding accounting treatment or not? How don't ask? Then to 2 hours. Just try to understand. If you are asking how, then to 2 hours, now then to regular class. It is not possible to explain how here. Correct. Have you understood what I am saying? So can you say it will become EB expense of which year? And we'll say to payable. To payable. And when paid, we'll say payable account debit to cash or bank. Understood this much? This is very easy. This is very easy. Understood? But can you say sometime company will not pay cash. Company will say you can take the leave in next year. Means this will be carried forward in next year. It is leave against leave. Means they will give you some leave in the next year. So this is not a leave for unavailed leave. Are you able to understand? Leave for unavailed leave. Understood what I am saying? Means if they have 30 days, if they have worked for 30 days yahan par, so they can take leave in the next year for 30 days of that year and 30 days of this year, so 60 days. So here 30 so is there, plus 30 will come. Right now don't think about this. Think about this. This will be carried forward in next year. This will be carried forward in next year. It means what actually happened, try to understand. Means this thoda sa I need to explain. Just try to understand what I am saying. Try to understand. And I want journal entry from you. Suppose this is 360 days. Every year 30 days suppose. Out of 360 will be Sunday. So no work na. Bola re. And 30 will be national holiday in India. Diwali, Pongal, Ugadi, same na. Correct. And 30 days leave granted. It means this is 2 months. This is 1 month. This is 1 month. And this become how much? 2. The balance is how much? Balance. 240. Understood. It means can I say in 360 they are working only for how many days? 240 days. Means working day is only 240. Working day is only 240. It means can I say out of 12 months, 4 month holiday and 8 month work? Understood? Correct? Correct. Now think logically. Suppose the company is paying 12 lakh for 12 months. 12 lakh for 12 months. So as per contract, every month they are paying 1 lakh, 1 lakh, 1 lakh. But effectively, can I say what is the concept? You work for 8 months and I will pay you 12 lakh. This is only na. Effectively, can I say we are paying 12 lakh for how many months? 8 months. So what is the salary per month, effective month? So we'll say your salary per working day. We'll say 12 lakh divide by 8 per month, per working month. How much? 1,50,000. Means can I say salary per working month means if you are working for 1 month, we'll pay you 1,50,000. In that no holiday. Are you able to understand? This much you understood? Thoda sa logically. Correct. Now, in these 30 days he worked for 30 days because he has not availed this leave. Means in this month he is actually working for how many months? 9 months. Understood? And the next year, can you say same situation will be there 360, 60, 30, 30, 240. And suppose this though he has availed, and he will also avail what? This 30 days who is carry forward यहाँ पर, so he will also not work for 30 days. Means in this he is actually working for 7 months. 7 months. Yes or no? Means 8 months was working, but 30 days was transferred to the next year, and suppose he has availed. So in the first year he is working for 9 months, and second year he is working for 8 months. So 7 months. 7 months. First year he is working for 9 months, and second year he will be working for 7 months. Total become what? 8 plus 8, 16. So 9 plus 7, 16 only. Are you able to understand this? Now in this case, question is that in the first year we recognize expense for 8 months ki 9 months, and the second year we should recognize expense for 8 months ki 7 months. This is the question. Question, have you understood? We are paying as per the contract to 8 months, but actually they work for how many months? 9 months. In the second year, as per the contract, they need to work for how many months? 8 months, but they are actually working for how many months? 7 months. So we should record EB expense in the first year for 9 months ki 8 months. 9 months ki 8 months. How many are saying 8 months? How many are saying 9 months? How many still thinking? Correct. So everyone saying 9 months. That is only concept. This is only matching concept. This is only matching concept. It means, can you say leave for leave, then also it will become EB expense of current year, because if the leave is carried forward, it becomes EB expense of current year because they have worked for current year. So this will become EB expense of current year. But guys, for this no payment, so we'll create a provision for this, and we write down 2 provision. There is no payment, and this provision will reverse in second year. So journal entry is what? EB expense to provision, and the same formula. Only this much. Both में journal entry is same, but here it is payable, here it is not payable because you'll get leave. So in the second year, once the leave is availed, we reverse the journal entry. We reverse the journal. Only this much you need to retain. Can you retain this much? But there is no good quality of question. When you will come to CA final, we'll do a detailed discussion about this, but not now. This much. I think 2 marks MCQs question may come, so you can answer now. Now what is given? Check karo. Accounting treatment for leave. If availed during the year, no treatment. If not availed during the year, and non-accumulative means which cannot be carried forward, no treatment. Accumulative means which can be carried forward. If it is vested means cash against leave, then full amount of benefit is provided for the cost of leave. Amount will be number of unavailed leave multiplied by salary per working day. Similarly, unvested means leave against leave. We call it unvested. Here we call it vested. Here we call it unvested. Here we'll recognize, we'll also create provision, but here provision will be number of unavailed leave multiplied by probability of availment, but I don't think so they will ask this much, into salary per working day. So more or less the formula is same. Correct. So for unvested leave, for current year, what journal entry? EB expense account debit to provision, and next you will reverse the journal entry, provision to EB expense. For vested, for current year, EB expense account debit to liability, and next you will pay liability to cash. Okay, done. Now, post-employment benefit is very, very important. Question will come from this only. Whether MCQs or descriptive, the question may come from this. So, post-employment benefit for accounting purpose are of 2 types. One is known as defined contribution plan. One is known as defined benefit plan. Do you know about PF, ESI? Provident Fund, ESI, Employee State Insurance. Do you know? Where you have done? Income tax. Income tax means in salary chapter. Very good. Excellent. Correct. Now, this PF and ESI are defined contribution plan. Do you know about gratuity? Gratuity is defined benefit plan. चलो example तो example so because of income tax teacher we are saved. Okay sir, चलेगा. So it means gratuity also, what is gratuity, PF ESI. Now if there is a defined contribution plan, then what happen, employer will contribute the same amount which is contributed by employee. Means if employees contributed 1000 every month, the employer will also contribute 1000 for the benefit of employee. So what our what our AS 15 says, whatever is the employer contribution will be recognized as an expense and liability in the year in which they are liable to contribute. Means it will become expense, it will become liability in the year in which they are liable to contribute. Simple. This is very simple. No short term. This is post employment benefit. This is post employment benefit. This is not short term employment benefit. This is paid, means it is payable to employee after retirement. But employer has contributed some amount on behalf of employee in some entity. So once they have contributed, it become expense of employer. It become an expense of employer in the year in which they are liable to contribute. Understood? So can you say here, if I say underdefined means, where is given? The employer contribution to defined contribution plan is recognized as an expense and liability when the employer is liable to contribute. And normally can you say PF ESI is payable within 1 month only. But what AS 15 says, suppose it is payable after 12 months, from the end of reporting period, then it will be recognized at a discounted amount. So if it is payable after 12 months from the reporting date, then such amounts will be discounted. However, this is not so much important. Only this point number 3 is important from exam point of view. Got this point? Only this much. Now out of these, this point number 2 is very important, DBP. So defined benefit plan, let us understand. Correct? This actually I need to explain you through one example. What they say, just try to understand. Suppose this is what? This is correct. And the first year entity announced one gratuity plan. Understood? And they have announced that every employee will be entitled to 40% of salary for each completed year of services after retirement. Understood? This is the plan announced for the benefit of employee. Keep 40% salary for each completed year of services. Now it will be which salary? Salary on the date of retirement. So right now we don't know this. And can I say is completed, so we don't know for how many years he will work. So can I say it is actually based on estimation. And because can I say we don't know, they may be 1000 employee. Some employee may work for 5 years, some employee may work for 10 years, some employee may work for 40 years. So there are a lot of assumption required. And therefore AS 15 says that this type of estimation is done by one expert. That expert is known as actuary. Correct? So this type of estimation is done by one expert, and that expert is known as what? Actuary. So only you need to remember this word actuary. Correct? Understood? But in the exam, so we need to work out. So they will give you some assumption. Based on assumption, you need to do some calculation. So they will say that current year salary is suppose 10,000. Okay. and salary will grow, salary will increase at a rate of 10% every year. The growth in salary is suppose 10% every year. And it is estimated that number of completed year of services will be given, suppose 5 years. Means we are assuming that this employee will retire after 5 years. This all information will be given in the question. Understood? Correct. Now we need to find out what will be the EB expense. We need to find out what is the EB expense. So in this, first what we'll do, first we'll calculate projected benefit. What will calculate? Projected benefit. Projected benefit means what amount is payable after retirement. This is projected benefit means what amount is payable after retirement. This is based on assumption. For that, first can you say, first we need to find out what is the salary of this year. What is the salary of this year? That is based on what? Growth rate. That is based on growth rate. So what we'll do? It is what? 10,000 into 10% into 10% into 10% into 10%. Correct? Now we'll do 4 times or 5 times 10%? 4 times or 5 times? We should multiply by 10%. 4 times or 5 times? 10,000 in year 1, this become year 2, this become year 3, this become year 4, this become year 5. So 5 times. 4 times. 4 times now, 4 times. So how much is the salary? So what is the last year salary? How much? 10,000 plus 10%, 10%, 10%, 10%, 10%. How much? 14,641. 14,641. Correct. Now, projected benefit will be 40% of this. Multiply by how many years? 5 years for each completed year of services. So this become projected benefit. How much? 29,282. This become projected benefit. Correct. Now you say this amount is payable for the first year or for the entire 5 years? Huh? Entire 5 years. And therefore now AS 15 says that this will be attributable to each year on SLM basis. This will be attributable to each year on SLM basis. So what will be the attributed benefit? It is 29,282 divided by 5. 5,856. Got this point? Okay. Understood? Are you able to understand? It means if I try to explain, see what actually is happening. Batao. This is Y0, this is Y1, this is Y2, this is Y3, this is Y4 and this is Y5. But we recognize expense at the beginning of the year or at the end of the year? At the end. Means right now we are standing यहाँ पर in year end 1. Correct. And for year end 1, what is the amount payable after retirement? 5856 na? 5856. And for year 2, how much is payable after retirement? 5856. For year 3, how much is payable after retirement? 5856. For year 4 is also payable after retirement, how much? 5856. And for year 5 also payable how much? 5856. Are you able to understand what I am saying? Correct. Now for year 1, but it is payable after how many years? For year 1, it is payable after how many years? 4 years. This is 3 years. This is 2 years. This is 1 year, and this is 0 year. But this is future value or present value? So expense of this will be at which value? Present value. Understood? Correct. So if you want to calculate expense, expense will be recognized as discounted amount. Discounted amount. Correct. So this expense is known as current service cost. We call it current service cost. So it means now we have to calculate current service cost. We need to calculate current service cost. Understood? So we need to find out present value y1, y2, y3, y4, y5. What is the attributed benefit? 58, 56, 58, 56, 58, 56, 58, 56, 58, 56. And we want discounting factor. I have not given rate of discount, that will be given. So our rate of discount is 10%. Okay? Rate of discount is also 10%. Let us assume. We need to find out discounting factor at what rate? 10%. And then we'll find out present value, that will be known as current service cost. We'll call it what? Current service cost. Now one hint I am giving, Sunna. Then you will calculate it. Present value you can calculate. This amount is payable after how many years? This, 0. Calculate present value. Present value I am not teaching, that is FM. Calculate na. Have you understood my question? Discounting factor what you are taking, batao. Again discounting factor, because now this is payable immediately. So this is 1. This is 1 now. And this is 0.909, 0.826, 0.751, 0.686 na? 683. 683. So here you can do mistake. So be careful. Understood why it has been taken this way? Have you understood? Because this is payable after 4 years. So this is Y4 discounting factor. This is Y3 discounting factor. This is Y2 discounting factor. This is Y1 discounting factor. And this is Y0 discounting factor. Understood? Now calculate it. You will get. How much? Bolo. 4,000? 4,398. Exactly. 4,000. 54. 5323. Done. This is current service cost. Understood? Let us repeat once again. I repeat. So first we calculate a projected benefit. This you understood? Then we calculated attributed benefit. You understood? Then calculate present value of attributed benefit, that become current service cost. Current service cost. Understood? Now we'll calculate calculation of interest cost and defined, we call it defined benefit liability. Defined benefit liability. So for that we'll prepare one statement: year 1, year 2, year 3, year 4, year 5. Opening liability plus interest at discount rate. What is our discount rate? 10% plus current service cost, and this will become closing liability. Correct. So can you say opening liability is nil, interest will be nil. What is the current service cost of first year? 4,000. So what is the closing liability? 4,000. Means what journal entry we have done? Current service cost account debit to defined benefit liability. That is payable, na? So we can say EB expense also, but the word term used in AS15 is current service cost. So current service cost to defined benefit liability. Correct. Now this will become opening balance of the second year. What is the interest? Interest will be 400, and once again we'll add 4398. So what is the liability now? And this will come यहाँ पर ना. Eight seven 8798. Now again it will do 8798. This will become 879, or we can say 880 also. 880, and now it will be 4839. How much? 14517. Now we'll do 14517. It will be 1452 and 5323. How much? 21,292. Then 21,292. This will be the last year interest will be balancing figure. Okay. This will be 5856. And what was our projected benefit? Total was what? 29282 na. So this will be 29282. So can you give me the balancing figure as interest? 2134. So this will come as balancing figure due to approximation difference. So this is your liability statement. So one question of this nature can be asked. Understood? Have you understood current service cost, interest cost, and defined benefit liability? Defined benefit liability. Understood? Chalo. Come to the question. One question is there. This question. Let us do. An employee Roshan has joined company XYZ in the year 2001. The annual emoluments of Roshan has decided itna. The company has a policy of giving lump sum payment of 25% of last round annual salary of the employee of each completed year of service if the employee retire after completing minimum 5 years of services. The salary of Roshan is expected to grow at a rate of 10% per annum. The company has inducted Roshan in the beginning of the year and is expected that he will complete the minimum 5-year term before retiring. Thus, he will get 5 yearly increment. Now, what they mean? Thus, he will get 5 yearly increment. It means from this, it is understood will do 10% how many times? 5 times. Because of this sentence, this word. Okay. What is the amount of the company should charge to PL account every year as a cost for defined benefit obligation? Means they ask current service cost. This become current service cost. Also calculate current service cost and the interest cost to be charged per year assuming discount rate is 8%. Look, can we do it now? Simple. What is the projected benefit? First we'll do last drawn salary. So 14,90,000. 210 will increase by how many times? 1, 2, 3, 4, 5. Because they have said he will get 5 yearly increment. So 10%, 10%, 10%, 10%, 10%. This will be 24 lakh. 24 lakh. Now we'll find out projected benefit The projected benefit, what they have said, 25% of last drawn annual salary for each completed year of services. So 25% of 24 lakh into what, 5, that is 30 lakh. Now this 30 lakh will be divided in how many years? 5 years. So it will come out 6 lakh. So 6 lakh become attributed benefit. Now you'll find out present value of attributed benefit, 6 lakh, 6 lakh, 6 lakh, 6 lakh, 6 lakh. So this will be 1. You can find out discounting factor at 8%. This will become current service cost. Current service cost. Understood. Now I'll prepare one statement. Opening liability plus interest cost plus current service cost. This will be closing liability. First year it will be 0. 0. This will come 4,41,000. This is closing liability. This will become opening balance. Then interest. Can you do it by row? So this is one question they may ask. Of 5 marks, say 8 marks, that I don't know. Till now not asked. So one question, same to same question will come. As it is, it will come. Only they will change Rohan ko Mohan. Understood? Only they will change this only. Okay. So one question. I hope you can do it now. But these are the chapters now you should revise. If you will not revise, you will not be able to do it. So there are some chapters that you need to revise before exam. Otherwise, you will not be able to recall. Means you don't require much practice on this. Or you should know what need to be done. For example, abhi we have done AS 23. So how much practice you will do? But if you will not revise before exam, you will forget. Correct? Consolidation requires a lot of practice. Amalgamation requires a lot of practice. Financial statement chapter requires a lot of practice. Cash flow statement, a lot of practice. But these are the chapters, no practice, but only last revision. Okay? Chalo. So what they have given, check karenge. So I have explained, check karo. कि accounting treatment of DBO. DBO means defined benefit obligation. Defined benefit obligation or defined benefit liability. So first, current service cost. What is journal entry? Current service cost account debit to defined benefit obligation. Correct. What is journal entry for interest cost? Interest cost to defined benefit obligation. Interest cost to defined benefit obligation. Okay. Now there is one point of actuarial gain and loss. Now what is actuarial gain and loss? Just try to understand. Now whatever we have estimated, that might be different from what? Actual. Means we estimated 10% growth, but actual can be 15% growth. So whatever we have estimated, the actual might be different. Or whatever assumption we have taken, that assumption might change in the next year. So what our AS 15 says that if the liability changes due to changes in actual assumption, initially you have major liabilities, suppose in the last question, what we have there? Suppose we have taken, this is the liability at the end of second year. Now if suppose in third year assumption changes, assumption might change now. Because it might have, because we have taken some assumption for calculating this. So due to changes in assumption, if this liability changes, so any difference in that liability will be known as actuarial gain or loss. Increase to loss, decrease to gain. Understood? And that actuarial gain or loss will be transferred to PL immediately. Any actuarial gain or loss will be transferred to PL immediately. So what will be journal entry for actuarial loss? Actuarial loss account debit to defined benefit obligation. What is journal entry for actuarial gain? Defined benefit obligation to actuarial gain. Only this much. But have you understood what is the actuarial gain or loss? Due to changes in assumption, if liability changes, any difference in the liability will be known as actuarial gain or loss. Got this point? Correct? Only this term you need to understand, actuarial gain or loss. Journal entry you have understood, but no question of this nature has been given in your ICS study material. Okay, chalo. The next point, this I think this step you read the same thing I have explained. The first calculation of projected benefit, then calculation of benefit attributed, then calculation of current service cost, then calculation of interest cost and DBO. So one question of this nature may be asked. This you have understood. Now the next point, which is more important, is plan asset. This is more important. Means I am expecting one question from this. Means if I will give in exam one question, I will give question from this only. Understood? तो plan asset, what do you mean by plan asset? Let me explain थोड़ा सा. Just try to understand. We have done DCP. DCP means what? Defined contribution plan. That is PF ESI. What actually happened in PF and ESI? Try to understand. So suppose this is entity and these are the employee of entity, and there will be one separate entity. We call it plan asset. We call it plan asset. There will be a separate entity. It can be either government entity or it can be any other entity. So in this what happened? Employee will contribute and employer will also contribute. DCP, defined contribution plan, correct? And what this entity will do? Entity will do investment. They will do investment in outside and they will generate return. Then on retirement, this entity will pay to whom? Employee ki employer? They will pay to employee ki employer? They will pay to employee. Correct? And the chapter is closed. Means once the entity contribute, their role is over. Means if suppose this plan asset is not able to pay to employee, whose loss? Employee ki employer? Employee loss. Therefore, in DCP, whatever has been contributed by whom? Employee, that become expense once they have contributed. Understood? But what happened in DBP? DBP, just try to understand. Can you say gratuity is also huge amount to be paid at the end of the on retirement? It will be lump sum amount. Therefore, they will plan this also. Means they will do planning for this expenditure. So in this also, one entity will be there, an employee will be there, and there will be one plan asset. But in this only employer will contribute. Employee will not contribute. Employer will contribute. Okay. And once again, this plan asset will do investment and will generate income. Now on retirement, this plan asset will pay to whom? Entity. And entity will pay to whom? Employee. Understood? It means, just try to understand, if suppose they fail to pay, whose loss? Employer ki employee? Employer loss. Understood? Therefore, can you say whatever they have contributed, that become their asset, not expense, because this is receivable from whom? The amount become receivable from whom? This entity. So this is known as plan asset. So whatever they are contributing, that become a plan asset. In this case, whatever they are contributing, that become expense. Are you able to understand? So therefore, we call it plan asset. Plan asset. Got this point? Have you understood? So it means, can you say we need to prepare one plan asset? Plan asset. Which entity will prepare one plan asset account? Now, if the amount is contributed, what journal entry? Plan asset account debit to cash or bank. So we'll say plan asset account debit to cash or bank. Understood? Understood? Correct? Plan asset account debit to cash or bank. Now suppose we need to pay to the employee. So we'll withdraw from where? Plan asset only. We'll withdraw from plan asset and then we'll pay to the employee. So for withdrawal amount, what journal entry? Cash or bank to plan asset. We write on by cash or bank to plan asset. Understood? Correct? So whatever we have contributed will generate some income. Will generate some income. Understood what I am saying? Just try to understand. Suppose I have given some amount to you, that you do investment on my behalf. So whether I know what is the actual income? No, not able to understand. Suppose I have given some amount to you, that you do my investment. So whether I know actual investment? I will know actual investment when I'll go to you, na? Are you able to understand? So what our AS 15 says that you need to recognize some expected income based on your expectation. So when I have given some amount to you, I am expecting some return from you. So suppose my expected rate of return is 15%. So what AS 15 says that recognize expected income based on expected rate of return. Are you able to understand? Correct. Now, so we need to pass one journal entry, plan asset account debit to expected income. Expected income. Plan asset account debit to expected income. The rate of return will be given and we can find out that. I will explain one question, that only one question is there. But to explain that I need to explain everything. Have you understood this much? Correct. Now, suppose this was 1 lakh. Correct. And you withdrawn 20,000. Correct. And suppose your expected income is, let's say 30,000. मान लेते 30,000. Correct. Are you able to understand? But at the end, the fair value of investment suppose become 2 lakh. Fair value of investment become 2 lakh. Means the investment, whatever you have contributed, what is the fair value is 2 lakh. That will be known at the end. So fair value of investment become 2 lakh. Understood? So what is the difference coming? 1 lakh 30 minus 20 minus, so what is the difference? Balancing figure is coming. How much? 90,000. 90,000. Understood? Correct. It means just try to understand. Actually, you have earned how much? 1 lakh 20,000. Because you contributed 1 lakh, you have withdrawn 20,000. So actually, you have given 80,000. That money now become how much? 2 lakh. So 80,000 become 2 lakh. So what is your earning? So actually, you are earning 1 lakh 20. But what was your expectation? Means you are earning more than expectation. So that is known as actuarial gain. If you are earning more than your expectation, that become your actuarial gain. So this is known as 2 actuarial gain. And if the balance sheet figure is coming in this side, that is known as actuarial loss. So if you are earning less than expectation, that become what your actuarial loss. This is the concept. Concept, have you understood? So we need to recognize expected income also and actuarial gain and loss also. Actuarial gain and loss also. Understood? Are you able to understand? Correct. This much you understood, to come to the journal entry. Batao. For contribution to plan asset, what journal entry? Plan asset to cash or bank. For amount withdrawn from plan asset, what journal entry? Cash or bank to plan asset. Correct. Can you say whenever you are withdrawing, to there are 2 points. First, you are withdrawing and you are paying also. So for payment of employee benefit, can you define benefit obligation to cash or bank? But this will affect DBO account and this will affect plan asset account. Understood? Then for recognition of interest income on plan asset by using what? Expected rate of return. This will be given in the question, don't worry. Okay. So your journal entry is what? Plan asset account debit to expected return, yeah, expected income. Understood? Correct. Then actuarial gain loss. Can you say we need to calculate this by preparing that account or by preparing one statement? What will be journal entry for actuarial gain? Plan asset account debit to actuarial gain. What will be journal entry for actuarial loss? Actual loss to plan asset. And both actuarial gain and loss will be also transferred to PL. Correct. Now, how to calculate this? How to calculate? First, we'll find out actual return. What will find out? Actual return means what is the actual income. So can you say we'll compare fair value of plan asset at year end with the book value of plan asset at year end. So how to calculate book value of plan asset at year end? We'll find out fair value of plan asset at year beginning plus contribution minus benefit paid. So this will be what? Book value at the end. So the difference will be actual return. This is your actual income. Actual income. From actual income, if you deduct expected income, that become what? Your actuarial gain or loss. So from actual return, if you deduct what? Your expected income, that become your actuarial gain or loss. Understood? Correct. Let me come to one question. That only one question. For that question, I have done this much explanation. If they will ask this question only for 5 marks. But interesting question. Mathematics required. Okay. As on 1st April 2001, the fair value plan asset was 1 lakh in respect of pension plan of JLS Limited. So this is fair value at the beginning of the year. On 30th September means mid of the year. 30th September means mid of the year. Correct. Plan paid out benefit how much? 19,000 and received inward contribution how much? 49,000. Means contribution given and benefit paid. On 31st March 2002, the fair value plan asset is 1,50,000. At year end, what is the fair value plan asset? 1,50,000. And the present value of DBO is 1,47,920. Actual loss on DBO is this much. So this is related to DBO. Huh? This is related to defined benefit obligation. So right now ignore it. Plan asset is separate account. DBO is a separate account. There are two accounts, defined benefit liability and plan asset. On 1st April 2001, the company made the following estimate based on the market studies, understanding the prevailing price. So they have given expected rate of return what? 10.25%. This is bakwas. You want only 10.25%. You are required to find the expected and actual return on plan asset. Expected return on plan asset. Understood? Now, in this question, they have taken some assumption. I don't know why. What is the assumption that I need to explain? Some assumption they have taken by default assumption. I don't know why. Are you getting what I am saying? Some default assumption has been taken, bakwas assumption. But once again, we do. Can you change the assumption? Because you will change. Who will explain them? 5 attempt wala. Are you getting? They are checking your paper. So we can't change. So same to same question will come. That I know. Only they will change the amount. Okay. What assumption they have taken? You know about rate of interest compounded half yearly? You know mathematics, rate of interest compounded half yearly? Correct. So in this question, what they have said, what assumption they have taken? Suppose this is 6 months. This is 6 months. So rate of interest is suppose 10% per annum compounded half yearly. Compounded half yearly. Achha, if the rate of interest is 10% compounded half yearly, it means what? It means if the amount of investment is 100, for the first 6 months interest will be 5, then 105 it will become 10% of 100, 10, 6 by 12, 5 na? Compounded half yearly. This is 10% per annum compounded half yearly. 10% per annum compounded half yearly. Means we are compounding interest every 6 months. So first 6 months interest is what? 5. So now your principal amount will become what? 105. So next last 6 months interest will be what? 5.25 and this will become 110.25. Understood? It means, can I say, if you invested rupees 100 initially and the rate of interest is 10% per annum compounded half yearly, you are actually getting an interest of 10.25. Means, this is your effective rate of interest on an annual basis. Effective rate of interest on annual basis. Bolna nahi? So what is your effective rate of interest on an annual basis? 10.25%. Means if you invested 100 rupees initially, so how much interest? 10.25 only. So we can multiply by 10.25% effectively. So you are generating 10.25%. Means I can say in this way also na, ki 100 into 10.25% is equal to 10.25% only. Correct now? So you are earning 10.25%. So can I conclude in this way ki 10% per annum compounded half yearly is equal to 10.25% effectively on annual basis? Can I say in this way? Mathematics upar gaya. Not able to understand now? Achha. Do you know 10% per annum compounded half yearly? So have you understood 5 and 5.25? This calculation you are understanding 5 and 5.25. It means what I am saying, if the 10% per annum is compounded on half yearly basis, so what is the total interest you are earning in a year? 10.25. So can I say in this way, if you invested 100 rupees, so your effective interest is how much for the entire year? 10.25. So can I say in this way, 10% per annum compounded half yearly is nothing but 10.25% annually. Both are same or not? Both are same or not? Yes or no? Correct. So in this, they have taken one assumption that this is 10.25% effective rate of interest. Means actually this is 10% per annum on compounded basis half yearly. Means they have given what? 10.25% effective rate of interest on annual basis. On annual basis. Understood? I don't know why they have taken this assumption. I don't know. What is the reason behind that? But same question has been given in your book. So we need to do that. From my point of view, when they will ask in exam, they will inform you that this is 10% per annum on half yearly basis. I think. So if suppose they will change, they will write down 10% per annum on half yearly basis, compounded on half yearly basis, and this become an effective rate of interest. So both are same or not? Both are same. Understood? Correct. Now we need to calculate what? Expected and actual return on plan asset. They have asked. So let us calculate. So what is the question? Question is what? Initially the fair value of plan asset is how much? 10 lakh. Then at the mid of the year, how much contribution received? 49,000. And how much benefit paid? 90,000. And at the end it become how much? At the end it become 50. How much? Achha, initially it was 1 lakh, sorry. Initially it was 1 lakh. And at the end it become how much? 1,50,000. 1,50,000. So what is the actual return? First let us find out actual return. What is the fair value of plan asset at year end? 1,50,000. We'll find out book value of plan asset at year end. That will be 1 lakh. How much you have contributed? 49,000. And how much benefit paid? So this is your investment. So what is the investment? 1,30,000 now. It means what is your actual return? Your actual return is what? 20,000. This to you have understood. This to you have understood. Correct. Now we need to find out expected rate of return. So expected rate of expected return. Expected return. Now you can calculate either by using 10% per annum compounded on half yearly basis. Either you can use this, which is not given directly in the question. So if suppose it is given, how to calculate? Okay. But what was your initial investment for 6 months? 1 lakh. 1 lakh. So for the first 6 months, your investment is 1 lakh. So you will say 10% into 6 by 12. How much? It is coming 5,000. So first 6 month interest will be what? 5,000. Then the last 6 months, can you say? You will say initial investment of 1 lakh. Then again you invested how much? 49,000, and how much you have withdrawn, and can you see this will be reinvested? 5,000 will come now. So what is the total of this? 1,35,000. So 1,35,000 into 10% into 6 by 12, how much? 6,750. So what is the total expected return? 12,750. Either you 11,750. Have you understood this? I think this is too easy. If this is given, so anyone can calculate this. Actually, this should be given, but they have not given this. Understood? Correct. Now, point number B. If suppose you are using what? 10.25% per annum. Effective rate of return. Effective, can I say effective rate of return now? So this is effective rate of interest. Means effectively you are earning this much. Look at this 1 lakh is invested throughout the year. So on 1 lakh you will generate how much? Okay, so 1 lakh you will generate 10.25%. So how much you are generating? 10,250. Correct. For the entire year. And then you invested 49,000. And you have also withdrawn what? So what is the investment? 30,000. This 30,000 invested only for 6 months. So you will say 30,000 for 6 months. So now you can apply only 10% on this. That is 6 by 12. How much it is coming? 1,000. What is the total? 11,000. Same answer is coming or not? IC has done in this way, but who will understand? No one will understand. We are not mathematicians now. But can I say, now I hope you can appreciate, if exam same to same question come, now you can do it. So same to same question will come. I know same to same question will come. So this way you do modification for 5 marks. They don't have any other question. That question, first question we have done CSC wala question, either that or this. That already came. Last time they have asked. Chalo dekha. I said expected to that came. Actually last time I forgot. Last item came na? This one or last one? Last one. So last power page also I came. I said expected. Correct now. So whatever I say expected, that question will come. That is my experience. So if you do that much, but not in every chapter, there's a consolidation. We have done limited question because I said do some other question. So we have done 2-3 questions only. But in this question there are 4-5 questions only. So I know which question will come. Now, if last attempt came, so this attempt the AS50 will not come. But then also don't leave it. So now if they will ask this question. This way, do na, do. But now if you have understood, do this now. Why will take risk? You have understood now. So what I am saying that they have done in this way, believe me, for a student it is difficult to understand why we have taken by 5%. So they go equivalent to 10.25 annually they have assumed by their own. Nothing is given the question, they are assuming in the solution. Why? So from my point of view, when they will ask in exam, they will write down this fact in the question also. From my point of view. Correct? Now, what is your expected income? What is your actual return? Actual return is 20,000. Expected is what? 11,750. So what is actual gain? So you are earning more because your actual is more than expected. So what is your actual gain? 20,000 minus 11,750. So what is the actual gain? Huh? Understood? 8,250. Suppose they ask you plan asset account. So how to prepare plan asset account? They may ask plan asset account. But the two opening balance how much? 1 lakh. 2 cash or bank how much? 49,000. Buy cash or bank how much? 19,000. To expected return how much? No, expected 11,750. And to actuarial gain how much? 8,050. What will be the closing balance? Check karo, 1,50,000 na. That is the fair value at the end of the year. This is the plan. So they may ask you plan asset account. Understood? Two questions we have done. So you need to revise these two questions only. But for that I need to give concept. So I am taking time because I am to give concept. But practicing the only two questions are. You will take 10 minutes to revise. Okay. One last point from which question may come, because I don't want to leave now that this question. But for that I need to explain next point. This much you understood? Past service cost. Past service cost. Now, what they are saying, just try to understand what is their concept. We suppose the entity already has 3 years is expired and this is the current year. In the current year they introduce one gratuity plan. So can you say if they introduce gratuity plan in the 4th year, so this will applicable to all the employee from the beginning. So a new plan introduced, but it will be applicable from the beginning now, because they have already worked for how many years? 3 years. So can you say it means when a new plan is introduced, you need to also recognize some past service cost? Yes or no? Recognize some past service cost for the employee who have already completed some year of services? Yes or no? So suppose in any year a new plan is introduced. So for that year to will calculate current service cost. But this plan will be applicable to all employees from the beginning, because they have already worked for 3 years, 4 years, 5 years. Understand what I am saying? So therefore, this is known as past. This amount is known as past service cost. Don't worry about amount, how to calculate. They will give you the amount. Only we need to understand journal entry. Correct? Now suppose the plan is that this plan is applicable to any employee who has completed 5 years of services. Who have completed, in my example, so I should say 3 years of services. Who have completed 3 years of services. So they will be eligible to gratuity only when they have completed 3 years of services. Correct? It means now we have calculated past service cost. Now this past service cost will be applicable to some employee who have already completed 3 years of services. And there are some employees who might not have completed 3 years of services. Suppose on an average they have completed only 1 year of services. They have completed only 1 year of services. Means there are two types of employees. There are some employees who have completed 3 years of services. There are some employees who have completed only 1 year of services. Now the amount will be given. Suppose this amount is 1,000. This amount is 800. Correct? So any employee who have already fulfilled the condition 3 years, so we call it this plan is vested. And when the condition is not satisfied, we call it is unvested. Unvested. So what our AS 15 says that for any vested plan, this expense will be recognized immediately. Means your journal entry will be past service cost, transfer to PL to defined benefit obligation. Will pass this journal entry. But for unvested employee, what is the remaining period? Means they have worked only for 1 year. For becoming vested, they should work for how many years? What is the remaining vesting period? 2 years. So what our AS 15 says that this will be recognized as an expense in the remaining 2 years. In the remaining 2 years. And therefore, we will say this will be unamortized past service cost to defined benefit obligation, and this will be recognized as an expense in the second year and third year, means remaining 2 year. Understood? Have you understood the point? Correct? Let me come to the concept. Past service cost. So for unvested plan, past service cost will be recognized as an expense on a straight line basis over the average period until the benefit become vested. Means simple, but it will be recognized as an expense in the remaining vesting period. So what will be journal entry? Unamortized past service cost to define benefit obligation. Means can I say this is not transferred to PL? It is not transferred to PL now. Means unamortized past service cost will have a debit balance which is not yet transferred to PL. अरे बोलना रही, which is not yet transferred to PL, means it will come in balance sheet. Yes or no? It will come in balance sheet, and that will have which balance? Debit balance or credit balance? Debit balance. Okay. And if the vested plan, then it will be recognized as an expense immediately. What journal entry? Past service cost transferred to PL to define benefit obligation. Means this past service cost will not come in the balance sheet because that is transferred to PL. Understood? Correct. So what they will do, what type of question may come? They will say कि 1000 is past service cost. Out of these 800 belong to vested plan and 200 belong to unvested plan, and the remaining vesting period they will give 2 years. So you will say this will be recognized as an expense immediately. This will be not recognized as an expense immediately. This will be recognized as an expense in the remaining 2 years. This will be your answer. This you understood? Correct. Last point from which now presentation of DBO and plan asset in the balance. How to present it? From this multiple choice question may come. Presentation of DBO and plan asset in the balance sheet. So DBO is a liability and plan asset is an asset. So what our AS 15 says that plan asset will be shown by way of deduction from DBO. Means plan asset will not be shown in the asset side of the balance sheet. Plan asset will be shown by way of deduction from DBO. So DBO will come less what fair value of plan asset. Understood? So suppose your DBO is 1 lakh and your fair value of plan asset is 80,000. So the difference will come 20,000 in the balance sheet. Understood? And case they can be unamortized past service cost also. So unamortized past service cost will have debit balance. That will be also shown by way of deduction from what? DBO. Means this will not be shown in the asset side of balance sheet. So we will deduct this also from what? From what? DBO. So what amount will be shown in the balance sheet? Defined benefit obligation less unamortized past service cost less fair value of plan asset. Less fair value of plan asset. The net amount will be shown in the balance sheet as liability. As liability. Understood? Correct? Understood? So this format you understood? This format you understood? Chalega? Yes, sir. Correct. There are so many things. What to say, what not to say. Come to question number 7. Try to understand this question. What they are saying? Rockstar discontinue a business segment. Under the agreement with employee union, the employee of discontinued segment will earn no further benefit. Means they have discontinued some business. Some of business. Means suppose they have multiple business, one business has been discontinued. Entity is still there. One business discontinued. So when the business discontinued, the employee will be left. Correct? And they are saying that they will know the employee of discontinued segment will earn no further benefit. Means no amount is payable to them. This is curtailment with settlement. We call it that number of employee reduced and will not pay any amount to them for this gratuity plan or any plan. Correct? Because employee will continue to receive benefit for services rendered before discontinuation of business segment. Curtailment reduce, this you read. ठीक है. Rockstar estimated a share of unamortized service cost. Means this become unamortized past service cost. unamortized past service cost that relate to the part of the obligation at rupees 18, that is 10% of 180. 10% of 180. Calculate a gain from curtailment and liability after curtailment to be recognized in the balance sheet of Rock Star Limited on the basis of given information. Immediately before curtailment, the gross obligation is how much? 6,000. The fair value of plan asset is how much? 5,100. The unamortized past service cost is what? 180. And curtailment reduced your obligation by how much? 10%. Means your 10% number of employee reduced. Correct. It means what they want to say, just try to understand. Before curtailment, what was DBO? Before curtailment, the DBO was 6,000 minus unamortized past service cost. Unamortized past service cost was 180 and fair value of plan asset was how much? How much? 5,100. 5,100. So this become how much? Batao? 720. This is before curtailment. Now can you say 10% reduce? So 10% employee will reduce. If 10% reduce, so 600 liability will reduce because nothing to pay. So your liability will reduce by what? 600. So it will become what? 5,400. So can you see if the liability is reduced, so your past service cost will be also reduced because that also belong to all the employee. So then this will be also reduced by how much? 18. So 180 minus 18 how much? 162. 162. Are you getting? But can you see it will not affect plan asset? Plan asset, it will not affect plan asset. So your plan asset will remain how much? 5,100. So what is the position? 138. 138. Understood? It means your net liability reduced from 720 to 138. What is the gain? 582 is the gain. Means 600 minus 18 is the gain. Understood? This gain will be transferred to PL. 2 marks MCQ question. 2 marks multiple choice question. They will say what is the curtailment gain. So this deduction in liability is curtailment gain. Understood? Correct? Yes, sir. You can understand with this. However, I will say this is better to understand in this way. Chalega. From my point of view, these are 3 expected questions which may come. There is no other question which I think may be asked in exam. There are many things to teach, but not important. AS 15 is this much only.